Hello, everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I'm your host, as always, Stan McCune, realtor right here in Greenville, and you can find all of my contact information in the show notes if you need to reach out to me for any of your real estate needs. And just a reminder, if you haven't already done this, please like the show. If you're on YouTube, very simple. You just scroll down, there's a little thumbs up button, hit that, please. Hit the little bell to subscribe, or it might say the word subscribe, or whatever podcast app you're using, same thing. If you can leave a rating or a review, that would be fantastic as well. That's all I ask of you guys. So please just take one quick little second to do that, and that'll put a little smile on my face. If you're watching on YouTube, you'll notice something's changed, and that is my glasses. Yes, I finally decided it was time to go in a little bit different direction with my glasses, a little bit rounder, a little bit darker in terms of the frame, and I like it. You might not, and I don't care because I do, and this is what I do for myself. But I've gotten good feedback so far, so hopefully you do like it, because that would be preferable over you not liking it. But take a look on YouTube, and actually this is a great episode to watch on YouTube because we're going to be talking about the market stats for the month of March. I'm going to adjust my microphone here a little bit. Market stats for the month of March. And I just want to preface it in this way. The data right now is noisy. And there's a reason, a very simple reason why the data is noisy, in my opinion. And that's because the world is noisy, right? We've got all these crazy things going on right now. And these things affect the real estate market, specifically in Greenville, right? Greenville, it's not like, there are certain markets, like for instance, the North Jersey market, right? If you don't know, I'm from North Jersey. I still have connections over there. I've not lived there since high school, but I still have high school friends that live up there. So I'm still tethered up there. I know realtors up there. It's a hot market. And it doesn't matter what happens politically, it's going to remain a hot market. Why? Because there's people moving from New York City or that are getting jobs in New York City that they need a home. And it's just too expensive for most people to live in New York. And so they go to North Jersey. Like, it's very simple, very straightforward. They're not going to be affected by what's happening, in the Middle East, or what's happening in the bond market, or what's happening, elsewhere. It's just different. Greenville, more sensitive, and so we're seeing a lot of ups and downs, a lot of peaks and valleys, a lot of things that are, from one month to the next might be like, okay, this looks like a seller's market. Hold on, now it looks like a buyer's market. Now it's going back and forth, and it's really hard to plant our flag and say this is the type of market that it is. I've said for a long time, it feels like it's going this way, or it feels like it's going that way, but ultimately it is a nobody market. Nobody's happy. Buyers aren't happy. Sellers aren't happy. But the reality of the situation is that we still need to look at the data and see exactly what is happening, because there's still some really helpful stuff and important stuff to look at in the data. So I'm going to pull up the Greater Greenville Association of Realtors monthly indicators, as they're called now. And we're going to start right at the top with new listings. Now, this has been an interesting thing to track because, if you're looking on YouTube, you can see new listings kind of steadily were going up, and then COVID happened. They dropped a little bit, peaked in 22, went back down, and then this is where we've started to see some crazy swings. They went like way low in the winter. This is the month of December, 23 and 24. They went way, way low, like the lowest since pre-COVID. And then they made a big correction, bounced back up. And then last year they made a really big correction. So we had huge year over year new listing numbers last year. And we've continued to be in the positives year over year with new listings. We're having more homes coming on the market now than we did a year ago. But the percent increase has slowed because we're going up against a higher baseline, right? So whereas we were, last year in 2025, we were competing with the abysmal 2024 numbers. Now in 2026, we're obviously competing against 2025, which was a heavy new listings year. Like 2025 by far had the most new listings that we've ever seen in one year in Greenville. And now that we're in 2026, we're still seeing positive year-over-year growth, but the percent increase is not as much. So March had 2,800 new listings. That's a record. We've never had that many new listings in 1 month ever in Greenville. That was a 7.8%, only 7.8%. Like you would think, wow, the most new listings ever, it's got to be a huge increase year over year. No, because in March of 25, it was 2,598 new listings. So it was only 202 more new listings year over year. So that's a 7.8% increase. This is a good thing, right? We want what I've been preaching over and over and over again for years now. We want more new listings. We need more inventory. That's what the market is looking for. Pending sales. This is an interesting one right here because pending sales have been a little softish to start the year. January, we were down 2.9% year over year in pending sales. February, we were up, but only 0.5%. So not even a full percentage point year over year. March, though, we skyrocketed. Market really took off in the month of March. I felt that. A lot of people felt that. And we had a 13% increase. And I mean, by far, if you're on YouTube and you're looking at this, like the March dot in the dot plot is way higher than any month going back all the way to 2008, which is insane to think about. A 13% year-over-year increase, 1,942 pending sales, almost 2,000. We nearly crested for the first time 2,000, not quite there yet. But we still have a chance to get there because very often April or May ends up being the highest pending sale month of the year. So this is going to be fascinating to track to see, will we get above 2,000 for a month this year? We've got, the month of April here that we're in the middle of right now. So we obviously don't have the data yet for April. And then we've got the month of May coming up. Very interesting. But that compares to 1,718. So we had over 200 more pending sales year over year, a 13% increase, huge increase. That wiped away whatever concerns that I had that I've expressed the past couple of months in the pending sales data. March just completely wiped all of that away. Obviously, more than made up for, what we've been lacking the past couple of months. Closed sales, on the other hand, we're down 1.1% year over year. This is now the third straight month closed sales have had a negative year over year print. So they went down to 1,552 in contrast with 1,570 in March 25. This is a result of the pending sales data being soft for the past couple of months, right? Because a pending sale is what turns into a closed sale. So the fact that we have a record pending sales month for the month of March means that the closed sales for the month of April, perhaps May, should be pretty strong. And, April of 2025 had 1,542 closed sales. I would expect that probably once it's all said and done, once we get the April stats in next month, we'll probably be in the 1,600 to 1,700 range for closed sales. So we should easily surpass April numbers. May last year was really strong, though, in terms of closed sales. I'm not sure if we'll beat that. But that will be interesting. But importantly, 3 straight months that we've had a decrease in closed sales. It's been a long time since we've had 3 straight months of year over year decreases in closed sales. So this is something we have to really keep track of, right? Because this is kind of a textbook contracting market right now, right? It doesn't matter how many homes go under contract. It only matters how many of those contracts get to closing at the end of the day. And so far, that market has contracted all year. I don't think that's going to happen for the month of April. But if we just have one kind of spike month, the month of April, and then everything goes back down May, June, July, et cetera, then that could be indicative that the entire market has contracted for whatever reason. Days on market until sale, an 8.6% increase. So this is the average number of days between when a property is listed and when an offer is accepted in a given month. So people ask me, how long does it take to sell a home in this market? I tell them this is the average. It's currently 63 days. Okay, so that's up from 58 days a year ago. However, that's down month on month from February, which was 71. Now, if you listen to the show, you know it's not a month on month show. I went into a ton of detail, or not a ton of detail, but I made sure I harped on that in a fairly recent episode. However, this is significant because if you look historically, March is one of the higher months of the year, right? This is where we talk about seasonality. March tends to be on the higher end for the year in terms of days on market. But you can see that February was 71 days, and then March came all the way back down to 63 days. And so it's possible that we had a little bit of a seasonal blip where the highest months of the year were actually January, February, right? The market just seemed to be really slow to start the year. A lot of people felt that. I heard that from a lot of people. Didn't affect me as much because I've made some changes to my business that have helped. But it's very interesting to see March being so much lower than February when that is not normally the case, right? It's not that we don't sometimes have this sort of thing. Like we had it in 2017. Here you can see the vertical lines are January. In 2017, February was the highest month of the year. But you go back one other year, 2016, March was the highest month of the year. And you go back to 2015 and January was the highest, then February went down, then March went back up. So again, there's a lot of interesting stuff here, but for me, homes selling more quickly in March than they did in February is, again, just one of these odd things where it's like, I think at the beginning of the year, a lot of people were just kind of like waiting and seeing, okay, what's the year going to be like? What's going to happen? Then they decided to, jump on board in the month of March. Is that going to continue? We'll have to see, because we might see some more, seasonal trends being bucked as the year goes on because of all of these meta stories that are happening, all of these macroeconomic things that are happening. Median sales price. Remember, we had last month, the median sales price went down for the first time in a long time. Year over year, it went back up in March, year over year. So the median, I prefer the median sales price over the average in terms of like what do homes sell for in the greater Greenville market. Generally speaking, the median is the number I like to look at. 323,950. So basically 324,000. That's a 2.8% increase from 315,000 a year ago. That's a good number, right? 2.8%, to be below 3. Really, I think Greenville really does best when we're seeing increases that are in like the 2 to 4% range year over year in home values. That's been kind of the historical trend. And so when I see a number like 2.8%, I'm like, okay, that's good. That's what we want to see. And you can look historically the past year, most of the months have been between 2 to 4%. So in terms of how home prices are appreciating and going up, they're going up at a clip that for the most part is good. Now, when you look at the 12-month median, it's only 1.6%. So that's a little bit on the low side. But most months, we are seeing appreciation that, and again, this isn't exactly appreciation, but it's the closest metric that we have to it. But we're seeing appreciation that is in line with kind of what the Greenville market kind of feels most comfortable to buyers and sellers. Now, again, all of this fluctuation in the data, December was only 0.8% increase. Then January hopped up to a 2.7% increase. Then February, a minus 0.6% increase. So basically a decrease of 0.6%. And then March, a 2.8%. So again, noisy, very noisy data right now. And so I'm just kind of waiting and seeing, okay, what exactly are we going to have some kind of a stabilization effect? Or is this just what the new normal is, where it's just like from month to month, it's just kind of a crapshoot? That's not great, right? That's not what buyers or sellers want. They don't want the crapshoot thing because we want stability. We want to know, okay, if I buy a home this year, in a few years, it's going to be worth roughly this amount. Or if I list my home this month, it's going to sell roughly this quickly. We don't like, these trends to have weird anomalies in them. And so that's something that makes me a little bit nervous. The data itself doesn't make me nervous, but the inconsistency of the data does make me nervous, because that says that that people are acting, I don't want to say irrationally, but they're reacting. Okay. They're not so much acting. They are reacting to what's happening, with the end result being, that some months look way low in some metrics, some months look way high in some metrics. And it's just hard to really get our sea legs for what is this market like. Now, if you're very interested in the average sales price, again, not the best metric for what average home prices actually are, but that being said, it's $408,361. That was a big increase, 5.9% year over year on the average. Averages are skewed by, if we sell a bunch of $1 million homes, that really pulls this number up. That's why I prefer the median. Percent of list price received. This is the percent found when dividing a property's sales price by its most recent list price. We talked a little bit about this in the episode that I did on overpricing your home. So this is a percent found when dividing a property's sales price by its most recent list price. So after price reductions, then taking the average for all properties sold in a given month, not accounting for seller concessions, right? So if a seller paid for closing costs, that's not baked into this data, but it's never been baked into the data. And so looking at the historical trends is useful. And so the March number was 98.3%. So that was, if you listed a home for $100,000, you could expect to get $98,300. That was a decrease of 0.1%. So it was 98.4% last March. Basically a meaningless. If we're seeing 1.1% up or down, like, those numbers aren't important. Now, it is noteworthy that we have not seen an increase in this since April, right? Last April, not this April of 2025. So basically, from May 2025 all the way through March 2026, every single month has either been lower year over year or flat year over year. That being said, I'm not drawing too many big conclusions from this, because you look historically, we're historically between 97 and 99%, and we're right in the middle of that, 98.3%. So that, by normal metrics, would be normal for Greenville. Housing affordability index unfortunately took a big hit in March, and this is because mortgage rates went up as a result of the Iran war. This is because, again, prices continue to go up, and I don't know if income data was affected at all, because that's, if you're on YouTube, you can read what the housing affordability index measures. It does take into account income data. And that's the one thing I don't have access to, so I'm not exactly sure what it might be factoring in for that. But if you're curious, the housing affordability index, we like it to be 100 or more. That means that the median household can afford the median priced home, given all of the economic conditions. It's 96 for the month of March, and that was a decrease from 101 in March 2025. So that's not great, right? A lot of that has to do with mortgage rates. Mortgage rates went way up in comparison to where they had been. Now they've receded a little bit. Let me look at Mortgage News Daily real quick. Mortgage News Daily has us at 6.29% as of the 17th. I'm recording this on Sunday, the 19th. So we'll see what happens when the markets open tomorrow, or even later tonight. But at the moment, housing affordability index should rebound a little bit next month. once we get the April stats in, because of mortgage rates coming down a little bit, assuming that they don't just hop back up for whatever reason. And if you're wondering, the reason for the mortgage rates going up, it's directly related to the war. Inventory of homes for sale, 21% increase. We're still seeing massive increases in inventory. So March was 5,614 homes for sale at the end of the month, which is nearly 1,000 units higher than March 2025, which is 4,641. So this has just been a steady increase. Now this is the highest that we've seen in 15 years. So straight up inventory, right? Not months of inventory, but just straight up inventory, highest in 15 years. Months supply of inventory, a little bit of a different story. Still the highest that we've seen in 10 years, but it's at 3.7 months of inventory. Again, that would, in a traditional market, that would be considered very much a seller's market. In this market, with all of the other weird things that we're looking at, I can't declare it's a seller's market on the basis of 3.7 months of inventory. How did that compare to a year before? It was 3.3 in March of 2025. That's a 12.1% increase, which interestingly is the lowest increase year over year that we've had the past year. So maybe we're finally starting to stabilize on month supply as well. Now, if you're wondering why month supply hasn't gone up nearly as much as just straight inventory, that's because demand is a lot higher, right? The demand for Greenville is much higher than it was 15 years ago. And as a result, our month supply is, even though our general inventory is comparable to 15 years ago, our month supply is only comparable to 10 years ago, because that's when we really started to see a lot more demand coming for real estate in the Greenville market. And that has continued, as you guys well know, to this day. Plenty of demand for our market, for the Carolinas in general. There's a lot of people moving, not just to Greenville, but to other parts of South Carolina, North Carolina. Sorry, I just had to do a little swoop with my hair. I've got no product in my hair today. I went to the gym earlier today and just took a shower. I just didn't do anything with my hair. But yeah, that's the reason why we've got month supply. Not like, if month supply were what it was 15 years ago, that was like the highest on record. Actually, 15 years ago, it hit the highest number of months that we've ever seen. It was around like 13 and a half to 14 months supply. That was like the bottom part of the Great Recession for Greenville. So it's good that we don't have that, because that would be really, really bad for everyone. Even, buyers always think, oh, we want a recession because home prices will come down. Well, as I've told you guys in the past, yeah, but then those buyers lose their jobs, and it ends up becoming, recessions oftentimes become a huge wealth transfer from the poor to the rich. That is usually what happens, because they get protected by the government, and then they use that protection, then buy up a bunch of cheap stuff that's cheap because of the recession, and they buy it up oftentimes from people that don't have as much money as them. And so we don't want that to happen. We don't want that sort of a recession to happen, because really the only people that benefit from that are the wealthy. And this is not a podcast. Well, you guys know I'm not anti-wealthy, but I'm certainly not pro having massive transfers of wealth from the lower and middle classes to the upper class. That's not great. So let's not do that. Let's just keep month supply kind of where it's at. Could go up a little bit, could go down a little bit. I don't think it would have a huge impact. But I'm fine with it being at 3.7 month supply. I think that we can live with that. So if you guys have any questions, my contact information is in the show notes. Happy to answer any of those. Please let me know. Please as well, if you need a realtor in this area, go to those show notes and find my contact information. Reach out to me. And if you like this content, please like, rate, review, subscribe, leave me a comment on YouTube, whatever the case may be. We will talk to you guys again next time.